So this is what happened, guys. Going over to my screen really quickly, we had the federal funds rate decision that came in, and it came in as exactly what was predicted. And all across the board, the New York Times, going ahead and reporting it as predicted. And he's still going right now as we're recording this. It's still live. He's still answering questions from the public. But as he is, you can see here that the prices all across the indexes for the New York Stock Exchange, for the NASDAQ, are all positive, and the NASDAQ even up 2%. Okay, some other key factors to pay attention to here is, big cap tech green across the board, green on the screen. Tesla up almost 5%. And then all your bonds or your bond yields are decreasing. The 5-year down 3%. So big bullish reaction to not only the rate hike, which was bullish, dovish, exactly what we wanted, exactly what the market was baking in and prepared for. And now you're also seeing, your cannabis stocks, your mid-cap tech stocks, all getting bought here, except Jenny is down red, probably on earnings or something like that. And then you also have oil producers down quite a bit, so rotating out of security and into tech, into risk. So Tim, why don't you, and let's take a look at crypto really quick. We took a look at the bubbles just a minute ago, but as you can see here, Bitcoin, Ethereum moving higher. Atom just absolutely, it was already having a really good day, up 6%. Absolutely monster, almost up 9% today. Tim, why don't you go ahead and bring us back through the TA that you were just doing and kind of give us some predictions about where this could go. But if I had to just summarize kind of what I heard Jerome Powell just say, it's dovish. I think he used a lot of language from the past. Specifically, the policies need to be sufficiently restrictive to reach that 2% target. So it's not like they're taking their eyes off the goalpost, off the goal here, or moving the goalposts. They're still shooting for 2%, but pretty much all of the rhetoric that I heard outside of that was very, very, very dovish. And I'll give you some examples because I actually liked all of the dovish moments from the public, and I'll give you a couple of them there. We expect housing services to move up for some months. Yes, because so that actually isn't bullish or
wait. He said what? Say it again.
Said we expect housing services to move up for some months, referring to how shelter is actually the lagger in keeping inflation high. So it hasn't corrected and come down like energy and some other goods. And then he also said, we have no incentive desire to over-tighten rates. So that was dovish. He said, seeing progress, but without weakening in labor market, which is good. Focus is on sustained changes to financial conditions, which was a new theme that I don't think has been discussed too much, but they're kind of shifting and broadening their focus to that. And then we're not yet sufficiently restrictive policy stance. So that kind of saying, and then also he said we're talking about more rate hikes to come. So more rate hikes, but that could easily mean
he said a couple.
25 basis points.
That means 2 more 25, which gets us to that 5 to 5.25.
Yeah, the terminal
level.
Rate. So
that's out of curiosity, did he mention anything about oil or food?
He mentioned no. I'm going to say no. That was pretty contrast, a pretty big contrast to previous. They even redacted that line out of the press statement.
Really?
There's a couple news outlets that do side-by-side comparisons, and the specific breakdown of the inflationary products were actually removed. So Tim, that is a summary of kind of what I heard. Dovish, baby. That was my interpretation. Now we have to wait a day. You have to let the market digest this. If you're a degen, trader, and you want to get in there and get and soak up the volatility right now, be my guest. Trade at your own risk. But I think tomorrow's open tomorrow's close will be indicative of what the market is actually reacting. Because right now it's anybody. It's crazy people. It's people who had just hit the bong.
It's a lot of emotional investors.
It's a lot of emotion right now that you're seeing in the market. A lot of jubilation and a lot of exuberance. I mean, you see it in me right now. I'm excited, right? doing all kinds of dovish hand signals. But Tim, I'm going to throw it over to you. Go ahead and break down for us what you're seeing on the charts and how your thoughts have shifted about crypto as a result of the of what we just heard from Jerome.
Yeah, I'm gonna start with going out here to the Dixie, and I mentioned this a second ago, but I'm looking at after we just broke here. Let me get some of this stuff. Let me hide this real quick. After we just broke this key level support, I had to hide that line right here. This 101, that was very key support. The fact that we just broke that. The next level I'm watching, $98.90. This is the peak. The next peak, we just hit a valley on the fixed range volume profile. This next peak, and it also lines up with the golden pocket of Fibonacci retracement. So that is huge. And it's not a perfect thing. I've seen the Dixie and Bitcoin and crypto move similarly, but more often than not, they actually usually work in opposite directions. So that's the first thing I'm watching. We got some bearish Dixie, which should be bullish for Bitcoin. In the first couple minutes since, we're heading back bullish. I think that is a point of caution that T-Shroom kind of highlighted right there. There's a lot of emotional traders trading right now, and I've seen both these things happen first. The first move can be a continuation. Like, it can continue. Right now, the first move in the last 30 minutes candles has been bullish. Sometimes we end up seeing a fake out happen. Sometimes the emotional traders buy, the bears take advantage of this. They get them into a bull trap. They take them down. But I've definitely seen where the momentum starts one way and then it continues. So this is something to keep your eye on. A good amount of volume coming in. We haven't had that much volume here for a little bit. I would say that peak and consistency of peak last half hours, we really haven't seen since all the way back here on the 25th of January. But good start going on here. What I'm watching for with Bitcoin, I'm watching, do we break through that 24,000, which was the resistance we had here just a couple days ago? Then can we start heading back towards 25? And if we can conquer 25, easy path to 28,000. It's going to take a week or two, maybe 3. But that's something absolutely doable. Could this bull rally continue, setting higher highs and higher lows? Ethereum finally moving again after Ethereum had been kind of boring here for a little bit. What I'm looking at with Ethereum is, can we start to make an actual push here? It was one of the few coins that kind of stayed close and hovered around the 20 SMA. Well, guess what? We just bounced there once again. So can we rally, start heading back towards 2,000, mark that we hit all the way back in August here a little bit later? Notice we're talking about August prices on Bitcoin. We're not that far away from August prices. Let me see where we are with Cardano. I think Cardano's lagging a lot, though. Cardano's got a good ways to go. August prices took it back up to 60 cents. But Ethereum is one for sure I'm looking. Can we start heading back towards that August high? Speaking of Cardano, going to Cardano again, that's one of the coins bouncing off the 20 currently. That's where we came down to. But now we're wrestling, got rejected at the 200. So first major bullish move for Cardano if it wants to go up. Break back above. We're hovering right below now. Break through that 200 daily SMA. Start heading back up here towards this line. This is the 49-cent prediction. Didn't happen. The Cardano community predicted by the end of January. It's February 1st. We didn't make it there as I expected, but even better, there's a good chance 56 cents comes back into the equation when you pull up the fixed range volume profile. This is a level. Let's see. Was it? Yeah, fixed range volume was I looking at? There's another valley right up here. Well, no, I'm looking at this valley right here, 55 cents. So right below that 56-cent level I was talking about there. But it's still anyone's guess necessarily what's happening. T-Shroom is right. Let's kind of enjoy the rallies right now. Be prepared. We're going to wake up tomorrow morning and we're going to see the real direction the market wants to move. The best way to describe this, once again, dawkish. This was a dawkish press conference. There was a little bit of hawkishness. There was a little bit of dovishness. The good news is it was a change in direction, not a pivot. It wasn't like Jerome Powell went from doom and gloom to everything's great, but the way he was speaking almost made it sound like, is he back in the camp of thinking the soft landing will happen? There's not going to be a recession. If there is one, it's going to be extremely mild. He's feeling good about himself, and when Jerome Powell's feeling good about himself and the economy is doing the things it's doing right now, whether or not it ends up turning shambles down the road for the next month, there is some bullish nature that should be coming back into risk assets. I'm going to say it right here. I could be wrong. I think we're going to be in a risk on state again, at least for another month, till we see the next level of inflation numbers, and then it's back to the drawing board. Do we need to go to continue the upside, or is it time to go back down?
Yeah, absolutely. That's kind of what I was taking from this fresh new information about our economy, about the market. Giving us a lot more data to the question. The ultimate question is the bottom in for Bitcoin, for stocks, and for many other risk assets around the economy. Well, thank you so much for watching, guys. We're going to go ahead and cut it off there. we have been the Investing Bros. I am T Shroom, and this is Tim over here. Make sure that you subscribe if you like this show, and please leave us a like. Again, thank you so much for watching. See you in the next video.